Welcome to our weekly Forex and Futures forecast. My name is Jay Norris. I teach trading at Trading University. As always, we need to point out that trading involves risk of loss and is not suitable for all investors. I'll leave you with these words of wisdom before we go to the charts. It is not often so simple to see both sides of the same coin. As a trader, you have to see both sides of the same coin. You have to see both sides of the same market, and hopefully we'll make that point in today's forecast. Here's the Australian dollar. Looking good. Aussie closed above resistance. You couldn't quite close above it last week, but you closed above it this week, so you get that weekly close above that resistance. Why is that significant to us? If we look at our ratio, because it shifted both the 25 and 50-day patterns higher. So as not only as a short-term trader, but also as an intermediate-term trader, you're looking to buy dips in the Aussie. Aussie gave some great trades earlier in the week. You guys that attended our live market analysis, you guys saw how we called that live. It was a lot of fun. Tuesday, too, was a big day for the Aussie, too. So Aussie really delivered this week, gave a couple of nice trades from the long side already. So what that means is, hey, longs are getting fed. They're going to keep going back to that trough. Also, you have decent fundamentals down under. Of course, you definitely have the benefit of long-term demographics and all that, but even short-term, it looks like right now, sure, Aussie has their problems, China has their problems too, but currently in this game of a rolling recovery, or I guess rolling recession, it depends on what you do for a living, whether it's one or the other. But right now, Australia's putting up decent enough numbers. It's almost like a game of musical chairs here. The U.S. economy slows a little bit, but Europe picks up, and Aussie employment numbers are looking good. So if people are working, they're spending, right? Aussies like to spend too. They're probably really only second to the Americans when it comes to consumption. They like to travel. So at any rate, at least over the short term, you're seeing some decent fundamentals down under. We're big believers that the pattern on the chart is absolutely a reflection of those underlying fundamentals. So we think you could see more upside here in the form of short covering. The majority of traders, if you look at it, here's Oanda's site where they keep track of their traders' positions or their customers' positions, albeit retail. But look, the majority of them are short the Aussie, so there's plenty of room for a short covering rally in the Aussie. And more important to us, most important to us, look at that 25 and 50-day pattern shifted higher. So we're all about buying dips in the Aussie, and it already started to feed us pretty good last week. So exciting about the Aussie. Next market, the dollar Swiss. Here's the dollar chief. It continues to hold support. How many times have we talked about this? It holds it. Well, that shelf there, yeah, that's pretty good support, and we can't say for sure what's going to happen. Kind of a flip of a coin, and as we pointed out before, you have to see both sides of that coin. If you close below that shelf, I think you're going to see a quick trip down to 93, and I think overall, if you do get some kind of a long liquidation or even a correction in the U.S. dollar, which is not unheard of, that's what markets do, they correct too. So if you get a correction in the dollar bull, I think you've got some pretty good downside here. I think 93 and then 92 after that too. So potentially some downside in the Swissy. Next market, the dollar index itself. Dollar index itself, I don't see it being prone to that big of a correction. Aussie, yeah, I think you'd have a pretty good short covering rally there, but the dollar index, as far as long liquidation, I'm a bull, I'm long term, and I'm not too concerned about it. You can still see the pattern here of higher low, higher low, higher low. So, they'd have to do some pretty good technical damage to me. If anything, I would think that a move down to 92 to test that long-term trend line, that'd be a positive thing. And if anything, I'd want to add to long dollar positions at that point. And there's the big picture here, the monthly chart, and there's that trend line. So as far as we're concerned, in the big picture, we think there's still plenty of upside in the dollar index. So 104 would be a longer-term, intermediate-term target, I guess, for us in the dollar index. So we're still interested in buying dips. Interestingly, you saw that big shift in the Aussie, but dollar index, the 25-day pattern is still up. So even if you shifted that 25-day down, we'd be interested in the support at the 50-day too. So dollar index pretty much status quo. Here's the euro coming up next. You always have to see both sides of the same coin. you definitely closed above significant resistance, just barely. You just eked out a close above there. I believe that shifted the 25-day pattern. Let me go to my ratio. Yeah, you did shift the 25-day pattern. So there's another market that could be susceptible to a short covering rally. On the other hand, I don't see it going too far. I mean, I'd be licking my chops about resetting some shorts longer term, just below the 112 area. So that'll be something to watch for sure. And what could spark that short covering rally, by the way, is again that that game of musical chairs in the global economy, where the rolling recovery, and right now Europe is starting to benefit from that. It's you have a pretty good seasonal in the U.S. economy where spending picks up in the spring, and you're definitely seeing that in the States now. We'd like to see it a little bit bigger. I'm kind of surprised that the Chinese manufacturing numbers were as weak as they are. Similar U.S. manufacturing numbers, not as bright as we'd like to see them. And I don't know if that's saying the spring boom in the U.S. is not going to be as big. At any rate, you are starting to see business pick up in Europe. So again, that rolling recovery or the game of global musical chairs may be favoring Europe right now, and that's panning out in some of our economic releases. And again, we believe the pattern on the chart is absolutely a reflection of underlying fundamentals. So you just did close above resistance for the week. You got a weekly close above that. So 25-day pattern shifting up for us. That means we're back to buying dips, not only just short term but intermediate term. And by the way, dip buyers were rewarded in the euro for the last couple of days. So again, hey, if traders are feeding on one side of the market, the professionals, they're not going to switch sides. They're going to keep going back to that trough. So potentially upside here. Long term, though, as I said, hey, I'm still bared up on this guy. I think you got pretty good resistance just below 112. Next market, the gold market. It doesn't look good for gold bears because look at that. You're seeing a correction in the U.S. dollar, yet the gold is going down. So not good for gold bugs at all. So that weakness in the gold market's telling us that you're probably going to see a correction out of that 1140 level. And again, if it's not going up when you'd think it would, when the dollar is weak and the foreign currencies are strong, if that correlation's breaking down, it doesn't look so good for again that long-term support holding. So we've been saying all along that hey, you got a bear market. If you look back, you're going back 1, 2, 3 years, and you have a pattern of lower highs, lower lows. Hey, folks, that's a bear. So if you do take out that shelf right there, we think it'll be a quick trip down to 1,000 and then potentially the 800 level there too. So it doesn't bode well once that dollar does recover back. So we'll have to see on the gold, though. All these markets, they're data dependent, just as the Fed is too. Speaking of the Fed, here's the 10-year interest rates, 10-year notes, and we've been saying, hey, this is a monthly chart, by the way. Let me drop down to weekly first. You've got to take out that support level if you're going to reverse this market. The Fed's U.S. Fed not in an enviable position by any means. The bags are all packed. They're ready to get on that raise the rate train, but the data's not telling them to do it just yet. And you almost have to think at some point they're going to be in a position where, regardless of the data, they're going to have to do it because the market's going to call their bluff on it. So right now, we're seeing still higher prices in the 10-year note, albeit they're below that resistance level. So it continues to grind its way higher. 10-year note interest rates continue to grind their way lower. So that's going to be something to see. And essentially where I'm going is all this indecision in the market could very well lead to long liquidation, i.e. a correction, a downside correction in the U.S. dollar. My name is Jay Norris. We had a great live market analysis this week. By the way, if you want to attend our live market analysis, it's every other Thursday. It's a live class. We point out trades in there. Or if you want to see the archive of just the Thursday past, because we archive that, sign up for our live market analysis trial. I'll leave a link below the video for that. You can watch the archive from Thursday's class and be in a position to attend our next class too. Hey, thank you so much, and we'll see you next time.